Our special guest on this Friday is the man you all know and love, tech trader Sean Udell. How are you this morning?
Good. Is there a gym in the house?
There is a gym in the house. What's up, Sean? How are you?
Things are good. I mean, I'm trying now to contain my ebullience. So we always have to check our theses, and I tend not to get too emotional about markets anyway. But yeah, it's I like single biggest theme that I've been calling for that really kind of sinking in right now is sort of. First of all, FANG down doesn't necessarily mean everything down, but just FANG down. FANG down, cloud bubble down, NVIDIA down. NVIDIA is part of that whole FANG contingent. So that's extremely healthy, actually. I mean, I think a lot of people think it's unhealthy. My view is it's extremely healthy because you don't have this massive market cap suck by all these algo programs into a really small number of names. So now we can see a lot of names that probably deserved to go up, 1 or 2 or 3 years ago, probably more like 1 to 2 years ago, can finally kind of get relief and get maybe some attention that they've long deserved.
All right. Well, we do have an 800-pound gorilla in the room, and that is NVIDIA. And, I can't remember exactly the level where you thought this might be attractive, but I don't even think that it's around the 169 level, which is where it's currently trading. So why don't you take the floor and talk about your thoughts and takeaway from NVIDIA's earnings?
Well, I mean, so here's the thing. Yeah, I mean, I'd have to go back and think. I once made 25, 30 points shorting this at 130. So, and that was right short term and long term, right? Mm-hmm. But I think, long term, it could be exceedingly right. So here's the best way to say it. And even now, okay, so NVIDIA's been cut in half. Even now, it basically trades at the same valuation as Workday. Now, Workday's a tiny little bit, maybe like 8% more expensive. Okay, but what is Workday? Workday is one of the premier software companies in the planet. Has a very durable growth franchise, extremely long embedded contracts, like typical Workday contracts, 3 to 5 years, which means it has an unbelievably strong balance sheet with tons of forward cash flow and lots of locked-in revenue growth. Okay, NVIDIA has none of that. So for people thinking, okay, hey, that maybe this is the time to step into NVIDIA. The one thing I've been consistent on and said all along is that chip stocks just don't trade at software stock valuations. They have one time. They did from roughly late 98 to early 2000. A lot of chip stocks traded at software valuations. We all kind of know how that ended. So chip stocks just do not trade at not just software valuations, top leading expensive software stock valuations. And that's what NVIDIA did. I mean, NVIDIA at 300 was trading, probably at about an 80% premium to a Workday. So this all basically had to come to pass. It's going to get rectified. NVIDIA is going to trade lower. And again, if it just trades as an expensive chip stock, that would be about $80-$90. I mean, at $80-$90, NVIDIA would still be a relatively expensive chip stock. So yeah, it just shows you how out of whack the valuation was on the stock. And we'll see. I mean, hey, I should have been short NVIDIA, but we all do things we believe we are right for us, right? And so hindsight's always 20/20. There's lots of reasons I haven't actually been short NVIDIA probably as much as I wanted to. The main reason is, one, it ties up a lot of capital. Two, the times I have been able to short it were when option prices were at least sane or less insane. So in recent months, option premium has just been sky high, even for spreads. So, but again, I always have to balance everything. And it's like, well, do I want to sell Acacia at 32 so I can short NVIDIA? No. And now Acacia's 45. Did I want to sell Twitter at 18 so I can short NVIDIA at 250? Well, no. And Twitter went to 40 some bucks before pulling back into the low, low 30s. So that's the thing. I always balance everything out. But the most salient thing I can say is that, and I've always warned everybody about this, is that chip stocks just don't trade at software stock valuations. And so, every 10 points lower, NVIDIA trades more rationally. I think the biggest question is, what's actually going to happen to the fundamentals now on NVIDIA? Did we literally see that perfect storm, which I also talked about a lot, that literally everything that could go right for them went right? So now are we going to see a period of time which was the norm for NVIDIA for 15, 20 years, where one segment is up, one segment's down, they kind of balance out. It kind of becomes more of a slow growth chip stock like it kind of used to be. So we'll see. I mean, I hope somebody finds enough gumption to sort of bounce this thing 30, 40, 50 points and, may become a better short, just because option prices might be a lot more rational now after the big drop. So we'll see what happens. My guess, though, is that this whole story in NVIDIA is probably not over until the stock's 80 or 90 or lower.
So you wouldn't even be thinking about sniffing at this one on the long side until then?
If you're not going to hold it overnight, or if you're a really canny short-term trader with good proven multi-year risk managements and have proven that you can run a trading book successfully over time, I think somebody of that skill level, sure, they can take long stabs at NVIDIA. I think they're probably going to end up losing most of the time, because I think the stocks that now are kind of have that come to Jesus moment, they can drop a lot sharper and a lot more quickly. Here's the problem with NVIDIA. What if it actually now overshoots? It overshooted massively to the upside, and we see this a lot now. Stocks that kind of go from being ultra loved to disliked or hated, they typically just don't go back and trade where they should have traded. They then usually go completely full circle and trade at kind of a crazy point. I mean, put it this way, if NVIDIA did something crazy and dropped like 80 points in 4 days, I might take a shot at it long. Like, if it has to show me something extreme. The drop today, though, isn't extreme. For the information they said and how expensive the stock is, down $35 is kind of what it should be doing.
All right. Did you have a chance to take a look at AMAT? Kind of a similar type story. However, we got a nice little bounce in here. I hadn't.
I actually like AMAT. Okay, so before last night, NVIDIA was still trading at 8 times out year. It's trading about 6.9 times out year. And AMAT, on the other hand, is trading like at 2 times out year sales. So it's cheap. Now, this was a $10 stock at the bottom in 2016. So if you believe the Cramer scare story, and again, I call it as I see it. Sometimes I agree with Cramer, sometimes I disagree with him. I kind of think he's right on the Fed. I think if the Fed just stays completely bullheaded, they're basically going to engineer. It's like we have a 100% chance they're going to engineer a recession. I don't think today's Fed is akin at all to the Greenspan Fed of when was that, 15, 20 years ago or something. So I think the Fed is much more open to the changes in data. They're monitoring it better. I think the Fed might stop hiking rates fairly soon. So, but let's just say it as it is. I mean, I think something like an AMAT, as long as you don't believe we're going back into an early 2016 moment, it's getting pretty darn attractive. I could actually be long AMAT. I mean, again, I probably won't because there's so many other names I just like better. But on pure valuation, on a name that I believe is very high quality, I do think the semi-cap equipment space is a much better space now than it was years ago because there's been so much consolidation. There'll come a point. Here's the question: AMAT, where does it overshoot? It may almost be in an overshoot phase now, given how durable the business is. I haven't quite determined though. I like the name. Where I am on AMAT? It's just it'd be this exact same where I am on Skyworks and Cirrus Logic and Micron, where, at any given day or hour, I could theoretically belong any one of those names. I'm not yet. I don't know if I'm going to favor those names over some of the longs that I'm in now. but they've all reached points that are buying points and valuation points that I could easily justify being long any of those stocks. So I probably like Skyworks better than AMAT, but yeah, I mean AMAT's dropped, and I mean they cut the thing in half. You know, what's my old favorite expression? It's a way better buy now than it was at 62. So and I think you could buy it here as long as you don't, as long as you don't dump it into the next panic sell-off. If let's just say this, if you were to hold it a quarter or two, I think you have a pretty good chance of making money, and maybe some pretty decent money. Because I actually like semis. I wrote this in a note either a day or two ago. I'm actually a lot more bullish on semis than probably almost anybody on the planet. I think too many people are looking at the semi chart and saying this chart looks like 2000, but what they don't recognize is, well, okay, so from 2000 to 2018, that's 18 years. So there's been a lot of industry changes in the group in 18 years. It took 18 years for the index just to get back where it was. So, the bottom, and by the way, the SOX is a pretty well valued. I mean, so even here's an expensive name. Even an expensive semi would be something like Avago. Avago trades at half the valuation of NVIDIA. And Avagos are, I mean, you tell me the percentage decline. They're down probably 30%, 35% off of highs. So Avago's an expensive semi at 4.5 times out year sales. Most other semis trade at roughly half their ratio. So this is not a group of expensive stocks. The key is, though, can it outperform the market until something happens that kind of makes people want to buy semis again? That's probably the trick, right? Like when will managers feel like, hey, I need to buy semis again? But I like the group. I think the valuation is there. I love Qualcomm, as you know, and names like Skyworks, again, didn't like it at 115, love it at 72. Applied Materials, hated it at 64. That's another name. I frankly probably should have been short, but I wasn't. But hey, cut it in half, lot more attractive. So here's the names you don't buy. You don't buy Xilinx. So what is the semi that now everybody's talking about, and is probably going to be making the same mistake? Everybody's talking about Xilinx. Oh, look how good the chart is. Oh, look at that last report. Blah 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 blah. Again, there's tons of good semis to buy now, which you can probably make good money in. They probably go down less than the market, and they may outperform the market as long as you buy the ones that have taken the pain. The one thing this market's doing is anything that hasn't taken the pain is going to take the pain. So, yeah, the single biggest mistake I think you can make right now is like buying something like Xilinx and not buying a Skyworks or an AMAT, or just some semi that's been horribly a Marvell, MRVL would be another one that I remember a lot of people talking like lovingly about it at 22, 24, 25. I don't know, like 6, 9, 12 months ago. I'm like, doesn't really excite me. Well, at $16, it's a lot more attractive. So, and Micron, same thing. How much love did Micron have at $60 with those $100, $120 analyst price targets that we basically pretty much panned? I don't think I was the only one that panned those price targets when they hit. So again, Micron now cut in half, a lot more attractive. So the one I would not touch, and I'm actually looking at it as a short, is Xilinx.
All right, so I do have that chart up. Let's look at that one a little more on a monthly basis. Oh, this is all-time highs in Xilinx, right?
There you go.
Oh, no, not quite.
I thought it might be all-time highs.
I don't see any stock splits, but I do have at least I don't see any stock splits since the 2000-2001 days.
So they have not yet surpassed their 2000 zenith high.
Yeah, right, around 98-ish. So.
All right. Well, that was a pretty crazy high. And hey, could this be the next NVIDIA? And can this literally go up another 50 to 100% after a point, which it probably shouldn't be at? I suppose it could. By the way, I do show it at all-time high. I show the 2000 high was 72, but again, different charting services have different numbers. You don't think they should, but yeah, no, they broke. So I show the 2000 high as 72. So I don't know. Charts.com is usually pretty reliable. Maybe they're wrong on that one, but yeah, no. I mean, like I say, good stock, good numbers, but look, don't you want to buy something that has a chance of really producing great performance and crushing the market, and maybe making 25 or 50 or 100%? Those are the things. I mean, is Xilinx going to go to 172? I don't know. I think the odds of something like a Skyworks going up 50% from current prices are astronomically higher than a Xilinx rising 50% from current prices, but that's just me.
All right, makes sense. Let's talk about some of the trades that you recently made, and we'll touch on Finisar and CLDR, because you bought CLDR at low prices, sold Finisar, I think it was around like the $23 area or so. Walk us through what your thought process is in this one.
Well, not really a lot, as opposed to, really nothing more than I said. I mean, I don't really want to be selling Finisar, but I'm basically getting 2-to-1 share count. So for every share of Finisar, basically gets me 2 shares of Cloudera. That's like the simple napkin math. But it's really, I've been waiting on this for a while. By the way, my cost on Cloudera is really low. I've never really bought the stock. I think 14, like between 13 and 14, pretty much where I bought most of it. I just didn't sell it all. I didn't sell it all at highs, but that's okay. But so, my it's not like way below my cost basis, but, I've gotten a lot of questions. Well, I do things when I do things. I don't do things when other people think it's the right to do things. And so, I don't know, it's just been down enough days. I think it's basically an algo trade gone wild. And somebody kind of asked me to explain that. It's tough to explain in writing, but verbally it's easier. Put it this way. It's not, here's the mistake I think Cloudera made. They probably should have put a price on the deal, but it's just 100% stock swap deal. So just like in 2000, not 2000, just like in 2008, the algos could basically short anything that had debt. And I'm talking investment banks and banks. So they could basically short stuff, and if nobody really stood in front of it, you could effectively short viable companies to zero or into bankruptcy, okay, until certain actions were taken. Specifically, they reversed the FAS 157 accounting rule. So as long as the FAS 157 was in existence, you could basically short a viable company to zero. So now you can't short a Cloudera and a Hortonworks to zero, but what you can do is you can basically just take turns shorting each name, because there's a ratio that's tied to the merger. So you can pick on Cloudera, and then if you get Cloudera to go down, it's like, hey, now Hortonworks is trading 10% above where it should based on Cloudera's price. So then you can hammer Hortonworks short, and then you could take Hortonworks below the quote unquote fair value tie up price. And then like, Hortonworks is trading. Now let's take turns. Let's short Cloudera again. So again, I'm not going to talk about sort of the wisdom of that this kind of trading it's even allowed to exist is one thing, but the bottom line is at some point that trade will break, right? At some point they'll have milked everything they can milk out of it, and somebody somewhere will say, hey, I can basically break their back short term and make them reverse this move. And so, I believe that's what's going to happen. And I don't know if it's going to take a couple earnings reports or one, or I don't know if it's just going to take, a liquidity. That's my guess. My guess is once we get through this corrective phase where we have a massive buyer strike, it's easy to short stuff, and once you just have any liquidity come back into mid and small cap stocks, which has kind of started the last few days, by the way, all of a sudden, just a perma short on a stock swap tie-up becomes hard to execute anymore, because the buyers will end up swamping the algo trades trying to promulgate that short. So and then guess what? If there's more money, if they can make more money bidding it higher than bidding it lower, they'll just turn the tables and they'll run it up. So I'm not too worried. I focus more on fundamentals, but I'm very aware of how things trade short term. And, all it's going to take is a catalyst. I actually thought, two pretty good analysts came out with pretty tough notes. Tough being it's tough for analysts to go against the grain. And two guys put upgraded Cloudera, and one guy put a huge price target. He's got it valued above my high valuation on it. The guy that put a 30 target on. By the way, I don't think he's wrong. My point is like 26, 28-ish. Yeah, he could be right. $30 could be right. So I think it's very close. I think it's been down long enough. And I might be a little early, but I'll just buy more at 10 if it goes to 10. But it feels pretty close. It feels pretty close to a price dislocation. It feels pretty close to a washout. Most of my chart work shows there's a washout. There's been just massive volume on the downside. I have heard some rumors too about, and I don't know if you can verify these, but a lot of hedge funds are kind of quote unquote in trouble. A lot of redemptions. A lot of redemptions had to be met by the 15th. Also heard about some hedge fund closings or potential closings and things like that. So that could be putting some pressure on names like this too, because a lot of these hedge funds are kind of like me. They kind of matrix all their stocks, meaning they kind of group. They have these big spreadsheets. They do this really good valuation, relative valuation work. And then what happens though is when you get kind of a big dislocation in the market, the programs don't really work very well, meaning like a stock that should hold better might actually go down more, right? So they kind of get in trouble, hit redemptions. I don't know. You never know. Maybe there's some hedge fund selling that's in excess. I think most of it's just an algorithmic kind of move. And I think, Cloudera actually made a mistake. They probably should have put a deal price on Hortonworks, and at least that would have created a pin at some point. So then you at least have a point at which, okay, the rubber band is tied to a certain price, so how far is the rubber band stretch? Right now, everybody's just wondering if there's something wrong with one of the companies or something. But this is, I talked about this too, not to get too long-winded about this, but when you go risk off, any M&A deal usually gets attacked. I mean, look at 2.6. I'm sure IBM hasn't probably traded that well since they announced the buy of Red Hat, and again, we could talk about the merits of that. But there's some other deals too. But the bottom line is, M&A deals, they're typically going to attack when you go risk off. They're just going to attack the acquiring company. It's an easy short-term trade. But yeah, no, I like it. I like Cloudera. I like I say, don't really necessarily like selling Finisar. But, in the 23s, it's not that far away from the $26 price. And so, look, I mean, there's a chance maybe somebody else comes along for Finisar. But, I mean, when I'm looking at Cloudera, I kind of agree that 30 might ultimately be a good price for them. I mean, we're talking a stock that's, another two lower, that's three-bagger. Finisar ain't going to three-bagger for me. So if I basically believe that Cloudera is going to go from 18 to 25, sort of that's kind of my worst case range, I think it's going to outperform Finisar. So the only other question would be, well, why not just swap all my Finisars? Like, well, I kind of still like it. I kind of want to hold it. I think it might trade higher. Something else may happen. Plus, there's no sense for me to get crazy long in any one stock. So I'm kind of getting to the point where I got close to enough Cloudera. So I probably, the amount of number of times I'm going to add to it are probably going to be reduced from this point forward.
All right. Some of our guys this morning got involved in some retail names. I believe, I can't remember exactly which ones they were now. I know one of them was Target, another one was Kohl's. So that brings me to a question from a listener yesterday. Several calls ago, you and I talked about BBBY, and I know one of the listeners wanted to get your take on this one. This one's trading now down in the 1243 zone. Why don't you give me your initial take on it? Because I know you were attracted to this one when it gapped down lower after earnings and whatnot. But while you're talking about it, I'll get that question so we can address it more specifically. But go ahead.
Yeah, I mean, to me, this one might be an overshoot. I mean, you know what it looks like a lot to me? It looks like when I liked Abercrombie. And I liked Abercrombie. I did well in Abercrombie, but I think Abercrombie ended up going three-bagger, and I think I made somewhere in the neighborhood of 40 to 80%. I can't even remember how much exactly I made on it. But yeah, this is pretty crazy. So, I mean, unless these guys have any kind of debt distress, and I don't think they do. I think they have a good balance sheet, and I think that they could probably divest of some real estate assets and things like that. I mean, this just looks like a typical, again, what happens? Stocks overshoot. This looks like an overshoot. I'm not an expert in this one, though, but I'm just looking at the chart. This looks like an overshoot chart. I'll dig into this one a little more. That does look pretty attractive. And it has bounced. I mean, if you were to buy this thing just from a trading perspective, it bounced big from a point where I kind of thought I might think about it, and I didn't do anything on it, and it had a big bounce, and now basically it's in a pattern. It's just gaps down when they report earnings. So what happens a lot of times in the markets? I'm seeing this right now. I just expanded my chart to about a 2-year time frame. What have they done? They basically had 3 big gap downs and 3 earnings reports. That might be enough. I mean, by the way, that's almost exactly what happened at GameStop before they had a big move. The watchmaker Fossil, that chart kind of looked like that. So you go back and look at Fossil's chart. Fossil had a big move. In other words, what happens is we finally get to a point where analyst numbers are so beaten up and they overshoot the analyst numbers. So a company like a BBBY might not even have to have a good report. It just might be better than expectations, and you get a huge short squeeze. Fossil was a trade that worked pretty well. What's in Under Armour kind of look like this at Lowe's? There's one obvious one I'm missing. BBY, Best Buy. The price wasn't the same, but at one point Best Buy's chart looked just like this. I was long Best Buy. That was another one I kind of messed up on. I think I made, I have this habit sometimes of making like 30 to 40% on a good trade on a stock that goes like 3-bagger. But we can't own them all. We can't own everything forever. But I remember really liking Best Buy and doing fine on it, and then the stock has just been a juggernaut. So and sometimes people just make more of this than there is. They try to kind of conflate a stock price move into is something diabolically wrong with the business, and that's not always true. I mean, sometimes stocks just move extremely huge on relatively minor news. So I'm not saying that Best Buy has had a minor decline in sales. It's been a fairly major decline in sales. But I don't know, chart looks pretty good. If you're a reversal trader, counter trend trader, that's the kind of chart you might want to look at.
Yeah, unfortunately, I'm having trouble finding the actual question. I do remember seeing it, so I apologize if the listeners out there and wanted a more clear take on BBBY, but at least you got his most updated take on that particular one.
Like I say, use one of my simple tools. Just put either a 3 or a 5 EMA on it, and you don't need to be a hero and try to catch it at the exact within 20 cents of the low. But a name like this, I mean, even if you catch it within 10 or 20% of the low, you still might be able to make a huge return. I mean, let's say you buy it at 13.5 or 14 and it goes back to 17 or 18. That's a ton of percentage move. And then if you do some work and you find out they're actually in a pretty good position, maybe it's one to keep. I have sunk my teeth into certain retail names and done very well on them. This isn't one I would particularly say I have any expertise in. But I do think I've looked at the balance sheet a while ago, and if I remember right, I think the balance sheet was decent. I don't think it was like distressed or anything.
Are there any retail names that you are excited about heading into the holiday season?
We talked a little bit about retail. Kind of the problem with it is kind of like a lot of the names I like the most have had pretty good moves. So at one point, like Dick's, Under Armour, again, Abercrombie was a year or so ago. Macy's was another one I liked. They've all had pretty good moves higher. I don't know, maybe this one be something to look at. Honestly, so I didn't really even plan to talk about this, but I'm almost wondering if home builders, I started looking at some home builder charts literally yesterday, and I don't know, I'm almost kind of wondering if maybe there's more fear in the home building sector than there should be. And I'm not saying they're going to turn around and have great reports, because the next earnings report or two will probably be kind of squishy for the group. But same thing, you've had a lot of very high quality home builder stocks take an absolute drubbing. And again, one could argue that did they overshoot a little to the upside? They probably did. but they didn't do an NVIDIA overshoot, or they didn't do a Facebook or an Amazon overshoot. They kind of did a mini home builder type overshoot, which probably is a relatively small overshoot. Lennar is a name that I think is absolutely one of the best operators in the home building space. And I'd have a hard time believing that, as long as you don't panic if it goes down another 10% and dump it. If you gave this some time, I'd have a hard time believing that from this price you wouldn't make money. It's basically back to the November 16 lows, which were pretty key lows for the group. And this stock had roughly doubled off the November 16 lows. And Lennar's a really smart operator. In fact, they have a distressed asset division that has made them tons and tons of money. So I don't know. I'm looking at Lennar. I'm looking at Pulte. I'm looking at Toll's the safest one. Let's see if Toll's been cut in half. No, Toll hasn't been cut in half, but it's gone down off 52 to 20 to 30. So not quite cut in half, but pretty close. Again, even Toll, it's within about 20% of their 2016 lows. That's probably a pretty attractive price. So I'd almost maybe say home builders, or this is just me for my personal book speaking. I might be more interested in home builders than retailers, even though I do think we're going to have a good retail Christmas, as we talked about on our last call.
All right. Let me check and see if we got any new listener questions while we do that. Any trade ideas up your sleeve? What are you doing now that earnings season is pretty much for the most part over?
Here's some market ideas and some trade ideas. So the first thing I'd say is just the action today. I think is very healthy. I think the action most this week has been healthy. I think we're starting to get that leadership change that I've talked about. A name, for example, a name like Twitter is up today, while Facebook is down. And, again, that was one of those perverse algo trades. Again, what's bad for Facebook should be good or even great for Twitter. But for roughly a 6 to an 8 month period, they kind of tied how Facebook goes, so goes Twitter from a trading perspective. Again, that's ass backwards. So now we're basically seeing, really Facebook's problem should become Twitter's gains. And so if that sort of weird, perverse algo trade breaks, that would be good. Again, we're talking about things, I think value tech could resume leadership. But what are we seeing? What was sort of the media view? So goes FANG, so goes the market. So goes Microsoft, so goes the market. So goes Apple, so goes the market. Well, that's true for maybe a few hours or a day or two. But what we're really seeing is that effect I've talked about, that if we finally, if FANG drops and gets more rationalized, that will actually allow tens or possibly hundreds of stocks to trade way better, more naturally, more healthily, and get back to sort of their relative valuation. And I think that's exactly what we're going to see. And I just like how trading, I think it's time for me to trade again, or increase my trading quite a bit. I'm seeing much better intraday volatility. I'm seeing much better overnight volatility. There's a lot of days where the market's moving 1% to 2% a day. Hey, if you're a trader, those are the things that you can make money on, especially if we get some rationality. In fact, so here's a trade I like. Here's an idea I like right now. Basically line up all the IPOs, all the new IPOs that really went crazy, and then have all basically round tripped. So my favorite of the group, or one of my favorites of the group, would be Pivotal. But we all know these names. And then Zscaler is one I would probably avoid, because that's kind of a nutcase name on a value. That's like a hyper valuation name. But things like ZUO, Pivotal, PS, I'd even put Redfin in there. I think a Redfin can probably start trading better. That looks like an overshoot too. That's not one of the newer IPOs though, but it's still kind of in that crop. Let me just go back. What are some of the other new ones? Forescout would be one. Anyway, everybody can kind of do their own homework and look. I mean, there's been a bunch of these new IPOs. But I'm talking, though, about anything that kind of came out around the same time as ZUO, Pivotal, Zscaler, and Forescout, and things like that. But anyway, that crop of stocks, PS is another one, that crop of stocks has been decimated. And by and large, this group has reported very well. This reminds me a lot of that 2014 decimation of the then new IPOs. So that back then it was Workday, Splunk, ServiceNow, Palo Alto Networks. They basically, almost every one of those stocks got cut in half or even down 65% from highs. And that was an overshoot phase, but they like you had stocks in that group that literally had never missed an earnings report. They literally beat and raised every single quarter. CyberArk was another stock in that contingent back then. So I almost think you could line these stocks up and either do a little field bet, grab a few of them, or pick a couple of your favorites. I think there's a good chance that group can trade well, and I think a lot of these still have yet to report. I know Pivotal has yet to report. Well, let's say this, maybe at least a few of them have yet to report. So Pivotal's something I'm looking at. I'm looking at ZUL. I already have a slight ZUL long. I don't know. I just like that trade. Now, if the market decides to take another header and go down another 3, 4, 5%, you get some beta downside there. But I don't know. I like that trade. I think that. So that's something I'm actively thinking about right now. In fact, I almost bought some Pivotal 2 days ago and I didn't. So I'm just these are names I'm looking at. I looked at PS. In fact, PS had a buy stop yesterday. It hit a level that would have fulfilled a buy stop. Carbon Black, that's the name I was looking for. CBLK, this is another name. I have a small long. I think I'm down about 2 points in it, maybe a little more. I might add to this. So this is just a good group. It's a good group of stocks, and we see this. What did they do? They all kind of came out at the same time. They benefited very short term from a hot market, and then once the market rolled over, it's been a group trade to the downside. And yet none of these companies have really missed a beat. So you're getting these stocks at a pretty good discount from where they traded, even at IPO in some cases.
All right. Well, I think we jam-packed a whole lot of new updates and even some new ideas in a 40-minute time frame. Might be our shortest call ever.
Hey, that's fine with me.
Yeah, it's always good to get some new ideas out there, and I guess if there's any words of wisdom of how to prepare for the upcoming season with the holidays underway, trading will be lighter than usual. What is your what's your ritual for creating new ideas as we head into the new year?
That's a good question. I just do the same thing I always do most of the time, which is, I just line all these companies up and I kind of look at, hey, how they've reported, how are they trading, what's the relative valuation differentials and things like that. The seasonality plays a little bit of a part. So we talked a little bit about this. Here's what I would say about kind of year-end or January effect. So my view is, okay, so is there going to be performance chase, or is it going to be just like last year? I don't know, but I'm prepared for both contingencies. So last year, well, really the last few years, they've been thought, hey, there's going to be a performance chase. Active managers haven't done well, blah, 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 blah. There really isn't. What happens is people kind of just tuck tail, and then they just kind of hide under their desks, I think, through the end of the year and then start anew in the new year. If we do get a big performance chase, I think I'm set up very well for it because I don't really think it's going to be a FANG Cloud NVIDIA performance chase. It'll be like, okay, hey, let's maybe try some stuff that we haven't tried yet because doing the same thing over and over and practicing the definition of insanity isn't working. So let's try something different. Meaning let's try some different names that are really cheap and might actually go up and stay up as opposed to, a buy the dip fade that gets faded again. So I'm not so sure we're going to have a performance chase. I do think there is a recipe, though, that we haven't had one for a number of years. We have had much better January effects. So maybe we're kind of due. Because, the other thing that can happen, too, sometimes you actually get a January effect trade that starts in early December as opposed to starting late December and early January. So that could kind of happen. But that's kind of how I'm looking at things right now. It's like, well, one of two things are going to happen. Either we're going to stay in this era right now where leadership is changing. FANG isn't trading well. They're looking for new leaders. Value tech and value stocks are starting to lead. kind of on a name-by-name basis. Good reports, by the most part, have been rewarded. As long as they're good reports on cheaper stocks, good reports on super expensive stocks haven't done anything. So I think either it helps most of the stocks I own through the end of the year, or if they succumb to tax loss selling, well, then I get paid early next year, because then all the tax loss victims will just end up having that much more return early. And I'm specifically talking about companies that have reported well. So Acacia reported well, could still have some tax loss selling. By the way, we haven't talked fiber optics. I mean, the whole fiber optics group, again, this quarter, pretty much reported well until Light. Well, again, Light reported poorly because of 3D sensing. It did not report poorly because of fiber optics. So all the fiber optic names reported well. The Light had a miss on 3D sensing. Again, Light actually had a conference. And they said they've not seen a loss of market share yet. If that's actually true, I actually think they're just wrong. If that's actually true, though, then you don't want to own Light yet, because you could trade them, but if they have yet, they will lose market share. They're going to lose market share to Finisar, and thus they're going to lose market share to a combined 2.6 Finisar combo. I still don't see that big of a cut without them losing a chunk of share. Maybe they just don't. Maybe they just haven't realized that they've lost a big chunk of share. But I really do think they've lost share, because IIVA guided a couple weeks ago, maybe even 5 trading days before Light announced their cut. IIVI didn't guide lower. So they should have roughly the same information that Light has. So anyway, we'll see what happens. But I still like that group. I mean, we still have huge data pulls and data constraints on networks. And we're still early days. We're still early days in network upgrades. We're still early days cable upgrades. We're just starting the very inkling of the 5G trade. So anyway, all that stuff, I know that's kind of rehash, but all that stuff is still out there, and it is still underway and is set to go. But all those names are kind of part of my value tech basket as well, or not all of them, but a lot of them are. But I don't know. That's kind of what I see. I see that. I don't know. I just don't think chasing FANG and trying to buy a dip in FANG is the trade that's going to work. And so I think people are learning that. Now their hands have been burned a number of times. I think they're going to start looking at different names. And I think they're going to go to different areas of the market. We will determine what becomes the next round of market leaders. We'll determine that over time. I think I own a fair number of them. Or I think I own groups or baskets of names. Here's the million-dollar question: Does energy and finance participate in that market leadership? I think they will, but man, they're acting terrible right now. But at least if you're buying those areas too, you're not buying hot charts. You're buying cold charts, and that would be the other theme as I would go into year end. I think the last thing you want to do is buy a hot chart right now, because what hasn't gotten hurt probably will. Again, like the last name in semis I would buy is Xilinx, because that's like the hottest chart in semi space right now. Wouldn't be surprised if they find a way to take that stock down sometime between, if not by the end of the year, probably in Q1 of next year. So that's the other thing. So what's the expression? The least loved becomes the most loved. Someone's trash is another person's treasure. I'm missing the exact market phrase. There's a market phrase. But it basically means, at some point, the ugly charts become the things you want to buy. And that's the other thing, too. I mean, that's where we are in the cycle. If you believe we're late cycle, typically late cycle, you get the companies that have been left for dead, that have not returned or not had bad fundamental performance, finally get their due. That has yet to really impact. By the way, I'm not so sure that we're as late cycle as everybody thinks. So that's the other thing. I don't know. I actually think there's more economic growth and embedded global GDP economic growth than I think a lot of people do. I think this is kind of a growth scare, what we're going through right now. But I'm not so sure we can just paint that the global everybody wants to pencil in, hey, recession's coming. I'm not so sure. I don't know if it's that easy.
Well, the good news is that you'll be around to help us find out as we head into
That's
next
right.
year. As we head into next year, um, well, man, always good stuff. Lots of new ideas. We got this recorded, so I encourage everyone, if they missed out this time, you'll be able to hear it again. We'll have it posted. Just in case anyone doesn't know, we always have this on Audio X. That's the ticker for the archives with our talks when we talk to Tech Trader or Chart Trader, or when Scott and Gavin run through some of their end of day activities. It's always a good place to find some of these archives. But with that said, Sean, thank you so much for joining us today on a Friday, and have a good weekend.
You too. I'm sure we'll be here a couple days pre-Thanksgiving. If everybody have a great Thanksgiving. If if we don't get on again before Thanksgiving, it's
All
gonna be a
right.
pretty quiet week next week, I think.
Yeah, I think so too. But yeah, I'm out, and I am out Friday. So if I don't talk to you, happy Thanksgiving, my friend.
Hey, you too.
Okay, take care.
All right, bye.